And for traders that have asked, the free courses download is in the description box below. The 4-step method to high performance trading and the 7-step daily routine for high performance traders. Bulletproof yourself to master the markets with discipline, confidence, and a winning mindset. Again, the link is below. They're free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today, just reviewing the high of day, low of day. After yesterday's short video, again, I mentioned that I look for instruments that have potentially broken a boundary. And then I received a lot of emails about that. And I'm going to review that concept once again and coming back to not just taking an instrument each day and trying to trade the movements when you're at the high or at the low, or where you perceive the high and the low to be, but having your best playbook setups and then looking through the instruments, understanding day 1, day 2, day 3. Are we up high? Are we down low? Are we inside? And whether or not there is indeed an ideal best trade setup. So the whole process is about keeping yourself out of low probability opportunities, but also targeting the best setups when they show up, regardless of the instrument. Now, the next component of that is timings, because the timing window is key. Now, again, I talk about traders are coming to the screen at all different times because of their location around the world. So, for example, I talk to traders who are in Africa, in the United States, in the Philippines, Indonesia, Europe. They're from all over the globe, and obviously their 24-hour clock is different each place that they're at. So not the chart themselves, but when they are going to the screen. So we have Asia, London, New York as our prime time window for trading. Now, our timing window is 8 to 11 p.m. for Asia, 2 to 5 a.m. for Europe and London, and 8 to 11 a.m. for New York. Now, again, there are lots of traders who are unable to trade during these windows, and there are opportunities in the gap time. But these are the key times when the major markets are open and the volume swells, and we will often see the high or the low movement take place. Now, I also talk about just targeting specifically that middle hour, that 3 a.m. London open, 9:30 a.m. New York market opens. And Asia can be a little bit different, but again, targeting, oil, for example, will definitely move at 4 p.m. Asia time. And, sorry, not 4. That's my chart time. We'll call that 9 p.m. 9 p.m. New York time. This is all New York time. And as I pointed out to traders earlier, I got a lot of questions, daylight saving, which time, but it's just New York time, regardless if it's winter or summer. So understanding that depending on where you're at, you may get an Asian trade on the Canadian dollar on occasion at the high of the day or the low of the day. You may get a trade in London on the Japanese yen, or you may get a trade on the Aussie yen in the New York session. It can vary, and that depends on the template and how they move the market. So it's about looking for the best setups during the window. And, sometimes traders say, well, I've got too much, if it's too much information, I can't go through all the charts. Very specifically, looking for the setup only takes you a few minutes to scroll through 8 to 10 different instruments. So in previous videos, we've talked about day 1, day 2, day 3, understanding the 1, 2, 3, or trapping longs up high or trapping longs down low. And just looking at the Canadian dollar, just as an example, because again, it's important that you go back and do your homework so that, as we talked about yesterday, your process in targeting the best possibility/probability instruments for the best setups is where this will boil back down to. And this is an example of a day 1
London session high of the day trade on the Canadian dollar. This is a Monday. Now, if we pink line is our Friday, Monday separator, but this breakout in Asia is a trigger. Now, obviously, this is for the London session. We'll talk about Asia in a moment, but this is a textbook example of an instrument that's broken out previous day's high. It's a Monday, it's a day one. So this is now the high of the current week when this day starts to evolve and trade. Traders get up, they check their screen. This is one of the instruments that has broken outside of its boundary on day one. And an excellent example of a day one high of day London session trading opportunity. So if we add our color code inside here, we have Asia breaking out, pulling back inside, and then breaking up back towards the high right in that first hour, giving us our double top structure inside as London opens. We're inside of a 50 pip box. Okay, so again, understanding that we've broken out of a double zero box. They've hit the high of Thursday. A larger double top structure, multi-session double top above the numbers. So again, locking in the high inside, targeting getting filled somewhere above the quarter level. Some traders want to try and get the best fill possible up top. This is a 15-minute chart. It's completely whatever your skill set and your tactical edge in live time dictates. Some traders will take a starter inside of this high boundary. They may just choose to execute and put a 1-bar stop in above that double top high. Now, some traders will want to hold on to this, targeting the low of the day from the previous day. Entirely your choice, your decision, however you choose to be trading. My objective in these types of scenarios is to be targeting probably 50 pips because of the rise, and in some cases leave a trailer for that continuation move through. My objective when I go to the screen is to trade that session and lock in the money, and depending on whether or not that setup is a 1-star, 3-star, 5-star, and how it behaves, be the opportunity to potentially scale size in. This is a high of the week opportunity. This is a great 3-star trade. Doesn't mean you need to load the boat, but there's definitely an advantage there in terms of scalability. This is a reproducible setup that can occur over and over again, regardless of the instrument. So understanding that as the week evolves, there may be traders in Asia that choose to scalp this back down towards the low of Friday in the Asian session. They're scalping down low. They're not going to put size on. We're down on the lower level. It's a high probability opportunity to follow through low-hanging fruit, closing out that low from Friday. Now again, coming into London, we've broken outside of the boundary. Now this is typical behavior Monday, Tuesday. Break a high, break a low, bring it back inside. So understanding that regardless of the instrument, the session offers traders opportunities once an instrument breaks outside of the boundary. Now if you're in the gap or anything else, this could be a continuation, and which is why I target specifically those timings around the equity market window. And you can see on Wednesday we pull back inside. Tuesday night, this is typical for the Fed. They pull it inside the consolidation is inside of the high and low of the week. They trap traders inside. Now there are traders who will trade this. They've taken their scalp knowing that the Fed is on the calendar. And this is typical of the Fed to hit both sides. This triggers breakouts, gets shorts from the night before, comes back down and gets the longs that are in the market and the longs from the U.S. session, triggers breakouts on the downside. What it will do today, no idea. We have a market that's closed down at the low of the week. We have day one shorts in and day two shorts in now triggered, but they're back inside of the low of Tuesday. If we look at the British pound on Monday, we can see a market that traded down toward its low of the Asian session, which was a swing low from the US session. So making a low, and then Monday pushing down into it in Asia, coming back into it at the Europe-London Open. So again, Europe-London traders had an opportunity for a buy-low trade. This is the same thing once that boundary is put in place as a high and low of the previous day. US session traders, however, up top have the opportunity for a high of day scalp back inside of the range. So you'll notice that there are certain days when they don't break out, but they're at the high and at the low. And as I talked about in the previous videos, just tighten this up, the high of the day will often represent major round number or quarter levels. So we're up high on the Monday in the upper third level of the range of that 100 pip box. We have a previous day's high on day two. So we've broken Friday's high on Monday. There's our day one breakout trade. This triggers longs into the market. They pull it back and they revisit that in Asia. So again, Asian traders may be in a long trade back to the high of the day, knowing that they potentially can fail at that extreme, and they're just taking that trade and taking the money. An example now of where traders may also have shorted up at the high of the end of the 3-hour 12 candle window in Asia. Again, it depends on when you come to the screen. But when we come to London, we have an instrument now that's broken the boundary. So they've triggered it, and understanding that that may be as far as they go, because that's far enough to not only trigger breakouts, but they don't want to allow them, the longs in Asia, to have any potential further profit potential. But coming back now into London, there's a Asian short trade in the pound short trade in the London session. Again, coming back down, if you know your levels and your number levels. So as I mentioned, we have the swing low. Now, if you look at the numbers, that's a quarter extension underneath. So yes, they've gone down into that range, and traders are holding on potentially maybe for the move all the way back down through that previous day's low. But the quarter level is where that market has turned off of. So when the session begins and they come down into it with this pin, US session traders who are switched on to that had the opportunity for the long trade back up into the London session. So again, the process is about understanding when we're at the high, at the low, and whether or not that constitutes a best trade setup on that particular instrument. You'll see similar behavior here as we did on the Canadian dollar, where they pull it back inside on Fed day. We're inside the 100 pip box, and you'll notice median price 50. They auction it back and forth around there, drag traders down lower, pin down, go vertical, and now we're back outside again. So trading inside here is where traders can get damaged and chopped up. On a major announcement day like this, your range in terms of risk reward can be reduced. So understanding when we're outside and then targeting the instrument that potentially shows a best trade setup from your playbook is where you have the greater odds of success, as well as understanding how to execute and manage that trade, because you have gone through that, you've traded it. It's the same setup, different instrument. It's an instrument independent. We can look at the S&P, and again, it doesn't matter. We have an inside day on the Monday, but Friday broke Thursday's high. The market stays inside, but it's up high for session traders heading into the US session. Now, again, if you're not familiar with trading certain indexes, they can have quite a bit of volatility, which is why I target them specifically at certain times and only if there's a best trade setup. We break out on the Tuesday, again, a low-hanging fruit opportunity for traders who are targeting that original low from Thursday. And we talk about the pump and dump scenario. So the market brings traders up higher, breaks down, pulls them up higher. The bias is to the downside on day 2. And on day 3, we have a market that has broken out and pulled back and gone into consolidation inside the low of Monday, heading into the Fed. So again, trading on these days, you need the understanding that until that major news release comes, they may be consolidating and chopping traders back up inside of that range. We go from low of the week into consolidation and breakout through not only the high of the current week, which is again trapping volume down low, day 1, day 2, day 3, trapping traders down lower, going into consolidation for the vertical move. So instead of just coming to the screen and trading the movements and everything else, standing back and targeting best trade setup opportunities. You know, it doesn't matter what instrument it is. It could be the euro. We have Friday, Monday, Tuesday, beautiful Europe session trade into the US. US traders trading the euro down low have very little room for profitability other than scalping into the low of the week. Whereas into the US session last night, we had a high of the day trade. And again, you'll notice they're getting traders to trade down into the low before going vertical. So instead of just looking to trade one instrument and trade the moves, I'm always looking to see which pair, when I come to the session that I'm trading, and predominantly that's the US session. I'm trading London right now till I exit Perth, but targeting the best trades eliminates a lot of guesswork. When you're inside here, this is all 50-50 and waiting, but specifically into the timing window, even if that trade opportunity is, 40 to 50 pips, but it's a vertical move, that's still a great trade. And as I talk about, lock in the money, get off the screen, come back, rinse and repeat, target the best setup the next day, and understanding where you're at, day 1, day 2, day 3. Are they bringing us up high? Is it a buy low opportunity? Is it a sell high opportunity? Keeping it really simple, staying to the outside, and if you're on the inside, understand that you're in the trend trade back to the extreme on the other side. So again, we talked about traders saying, well, how can you trade that? You're on the inside. Understand the template, day 1, day 2, day 3, and then you'll see the trend trades on the inside when the market has not broken outside of a boundary at those timing windows. So hopefully that helps traders. Again, thank you for a ton of great feedback and well wishes. I appreciate that. Just wrapping everything up with movers and getting things packaged and shipped. Family's already over in North America. So keep it simple. Keep this your best week ever, and may the markets go with you.